All right, welcome back to the channel. Crypto Trend Trader with our Sunday evening market look ahead. Let me know that the picture and everything is coming through and the volume is loud and clear. It's getting some kind of weird error when I went live, but everything looks good on my end now, so we'll assume that it's all sorted out. It is 8 p.m. Eastern Standard Time on Sunday, April 24th, 2022. Before we get started, I'd like to remind you, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So let's go ahead and jump right in. We're obviously paying attention to our close for Bitcoin from last week and looking at how that lined up with our open for this week. And we basically saw like no price action movement over the weekend. So it was basically right in line. So we don't have to worry about any additional gap or anything like that to pay attention to. We saw some interesting moves in gold and silver, and then the gold silver ratio chart. We saw pullbacks in a couple things towards the end of the trading session on Friday. And obviously, I mean, it's no secret, but our thesis has all but been confirmed at this point in time. So let's go ahead and start where we usually start with TNX. So we closed up here at 2.9, essentially at the cycle high for this cycle. We do expect, keep rising over time, but we have very clear bearish divergence taking place on the daily chart. So at this point in time, we have only bearish divergence on the stochastics, not on the TDMACD, but definitely paying attention to see what happens here. I do expect some kind of temporary top, but I mean, this thing's on fire at this point in time, so I'm not trying to pick the top by any means. TLT, obviously the reverse situation, just trying to basically carve out a bottom here. We've spent like 4 or 5 days now below this descending channel, and we're essentially at a key support line here of the ascending channel that's been going historically macro back channel. So we do expect some kind of support around this level, but we're at our target zone. I had called out for a bottom at around 117, something like that, to like around 119, which is basically where we're at right now. So you don't want to get too greedy on this. We have seen quite a bit of momentum though, pulling money out of the bond market. So you also don't want to get on the wrong side of this and try to pick the bottom either. If we look at the weekly chart right here, we can see basically we have flipped over this 200 exponential and simple. They're crossing to the downside. The 200 simple is basically flat. 200 exponential is already crossed the downside, and we're well below that point. So at some point in time, I do expect a very violent bounce back to the upside, reversion to the mean play to retest those moving averages. But with how much, basically the speed and velocity of the move so far, again, don't want to try to pick the bottom on this because we could easily see a big old candle short squeeze come down in here before, or long squeeze, whatever you want to call it, before this thing decides to rebound. That's what I'm looking for, though. Essentially looking for something that tells me this thing is bottoming, something like bullish divergence or something like, a big rejection wick to the downside. But in the meantime, it looks like it's just picking up steam to the downside, and we're getting mixed signals on TLT, not seeing that same divergence developing. U.S. oil, again, rolled over and lost that key support line. We have the ascending red support line here. We have the triangle pattern. We basically kind of got like a little breakout of the triangle, but the most important thing was just the previous highs over the actual, pattern itself. And it looks like we're basically rolling back down. If we do retest the bottom of the range again, I think there's a high likelihood this breaks, and this was in fact a topping pattern. So that's what I'm paying attention to. Energy-wise, just in general, I think we've seen commodities in general. We've seen like the easy part of the trade I think is over. So I think we're looking at some short-term tops and some retracements, but I do think long-term that it's probably going to be a buy the dip opportunity. So the Dow Jones, not only did it have an extremely aggressive sell-off candle, but it closed at the lows, which means the mentality behind a Friday close and then a close at the lows gives you a strong idea of what's going to happen come Monday. So a Friday close, obviously, if there was a strong trend taking place and it closes in that strong trend, it's likely the trend continues. You just ran out of time. If it's looking like there's a potential bottom and then it closes, or we're seeing weakness or rejection or something, it's likely that that will be a pivot point for, the market on Monday. So when we see a combination of two of those indicators, one is closing at the lows, which means there was no rejection, we just ran out of time. And then we see a strong candle leading into it for a close on a Friday, the probability of seeing continuation to the downside that following Monday is like in the 75% or higher, depending on some other metrics. But that basically tells you that Monday is going to be another bloody day. So last thing we want to do is try to get ahead of any of this and, basically see how it plays out. So we obviously saw a very aggressive dip down there. There's still one bullish case that could be made for basically an inverted head and shoulders. We have like a neckline here pretty clearly. We have a left shoulder, a head, and now here's like our right shoulder. Now you could argue that it was already that, and now we're breaking down from a failed breakout. You could argue that this is the shoulder, and this was just like, a little hump in the middle. But at this point in time, I think it looks very unlikely that we're going to see any bullish patterns play out. We're seeing basically a rejection on the stochastics. We're seeing, a rollover below the zero line and back to red histograms approaching the slope line. We're obviously getting rejected off the 200 exponential and simple on the daily. At this point in time, I see no reason this is just going to turn around. So the real question is, when we get back down to the lows, when we retest or revisit or, sweep the lows, let's see what happens when we get there. The buyers come in again. Do we see a little bit of weak buying just because it's, a recent bias support area? Or does the market try to actually put in a bottom? Because remember, a lot of people were taking positions here saying they thought the bottom was in. That was it. It was done. And now it's, I think, pretty evident that it's only just begun. So even if the Fed, has to adjust course and come back and, renege on everything they said they're going to do or switch policy, or whatever, stay, dynamic, whatever their word was, Jerome Powell and cat-like reflexes don't go together for me. So, I don't expect that anything's going to change until something changes, if that makes sense. So I still think we're coming back down to revisit those lows. And a lot of those people that were buyers down there will be sellers because they'll be looking to just get out of the position because they thought they were a genius, I think, when they entered these positions. And then we immediately get an aggressive bounce. When it becomes clear that we're going back down to that level, people are they're highly motivated to take profits because they don't want to turn a winner into a loser. They'd rather either break even or just cut their losses, get out before it's too late. So this is like inverted head and shoulders. We were talking about potential pattern for SPY. We're obviously breaking down from that. We have a key level here that we needed to hold, for potential support. And again, we're going into it very, very aggressive. We're not seeing any kind of rejection wick or anything like that. And in my opinion, at this point in time, it looks like we're headed much lower. It looks like we're headed much, much lower on some of these. So, I think the best thing to do at this point in time is to start really paying attention to all of these and looking at their fibs from the Rona dump. Because if we go back to the Rona dump to the high right here, at least that way we know once they have tagged the 236, or if they tag the 236 and we see a reaction, or in some cases the 382, we know that that's the same thing the market's looking at. So obviously we front ran it on the head back here. I think that's going to be our target to the downside. So I'm really looking for, it comes in at 396, but I think if we call it 400, that's really the level I'm paying attention to. So we see the NASDAQ is, much closer to already being at those lows again. And we see it actually put in a low, then revisited that low. And now here it is coming back down again. So again, we're seeing extreme weakness from the NASDAQ. Again, we've already rolled over the 200 exponential and simple. It looked like I just wanted to flip back. It looks like we finally have flipped over on the S&P. We had one little scare right here that we averted, and then here we flipped them over. So as far as this is concerned now, we have confirmed the Dow, the S&P, obviously the NASDAQ, and then the Russell has both been in bear markets this entire time. So any hope there was to avoid the quote-unquote bear market, indicator, or at least the way I do it, for the S&P or the Dow Jones, is over at this point in time. So we're back on the bottom and looking weak, looking very, very weak. So call that obviously a dead cat bounce or a reversion to the mean, retest of the 200 exponential and simple. We've cruised up there, we've got rejected, and now it looks like we're selling off. And the truth is, obviously the Russell is total trash. It's total garbage. Anyone that invests in the Russell is, obviously uneducated or just a complete masochist and just loves the pain. But the truth is, this Russell lead-in is the same pattern that we're seeing in Bitcoin, in crypto right now. So we have a long leg lead in from basically a break of the consolidation zone. So we consolidated in this zone forever. And the whole time it was, okay, is this accumulation or distribution? It's reaccumulation before we go higher, or it's distribution before we go lower. So then what happens is we break out, hit those stop losses, start to push to the upside. You know, anybody that was shorting the top, their stop gets hit. Little momentum, we get a technical breakout, a new all-time high, and then what happens is that's not sustained. The market makers, the whales, they sell into that rally, and then that's basically a Wyckoff type 2 distribution pattern taking place. So then we revisit the lows, retest usually the heart line, and then we break. So that was distribution taking place the whole time. The market was just thinking, oh no, it's accumulation. Oh, it's going to go higher. It's just resetting. It's reloading. It's getting ready for the next big run. But instead, actually, what happened was it's such a piece of trash, you know, index that everything in it had already topped. And that as the bull market was starting to become more concentrated on certain names, as opposed to just being, you know, a dartboard where you could throw a dart and anything you hit's going up. So once we saw that mentality shifting, the Russell was the first to suffer, you know, and a couple other big names as well. You know, we look back and we see like, you know, Amazon and Netflix, and some of these companies have been dead money for a while now. Some of the early performers. I mean, Zoom, you know, was huge in the beginning and busted its nut way too soon. So it's been going down while other things were putting in all-time highs for a year. So that being said, what we're seeing now is we have this long lead-in leading into the pattern that we're currently in right now. And typically what happens is if you get the long leg to the downside, the consolidation pattern will be to the upside, and then the break will be continuation to the downside. And you typically can do a measured move where you basically just take your, you know, same move, and then from the break point, that just gives you an idea roughly to where that would take you to. So the first move took us exactly to the 236 on the macro from the Rona dump. Our next target is the 382, which is 1715, but the measured move down, assuming we broke out right now, which we technically have, but we'll see if it sticks, that would take us down to 1,544 on the Russell, which is exactly at the 0.5. So we're at the 236, the next target's the 382, but you know, the measure move or the breakdown is pointing us to the 0.5. So, you know, that might be our macro bottom. We'll see. We will see. But it seems very likely as we're just stair-stepping down this Fibonacci from our macro lows for the Rona dump to now. And then again, if we look back here, that 0.5 level, I'm sorry, that 382 level comes in almost perfectly with the top leading into the Rona dump. So that would basically be a massive run, consolidation distribution, a retest of, you know, our previous high. And then if that held at the 382, maybe that's it. And then we just go higher. I suspect, though, they will have a deep retrace on some of these trash bag indexes and stocks, much deeper than we see on like actual quality names. So it would make more sense to me that this actually has a deep retracement and doesn't hold that level, but maybe something good like, you know, Dow Jones or the S&P, you know, might actually. But it is important to notice that this is the Bitcoin chart here, basically. And this is the same thing that Bitcoin is doing right now. So when we get to Bitcoin later on and we look at it, we'll see it's doing the exact same thing. And this is the Russell. I mean, the correlation between Bitcoin and the NASDAQ is literally at all-time highs right now. So once again, you know, the dream of crypto, the idea of crypto, it's dead. It's just another tech stock to bet on. And the difference is they don't have earnings or anything like that, so, or sales. So, you know, the cryptos can't even like, you know, pad their numbers or cook their books. It's all about, you know, hopes and dreams. So that being said, got to be real careful which cryptos you're in right now, in my opinion. You know, obviously none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. But, you know, we were talking about it leading into this year, and I told you, you know, the theme was going to be, if you can't drop it on your foot, you don't want to own it. And if it don't make money, it don't make sense. That's the two main things we've been talking about all year. And those are like old school thoughts. You know, essentially, if it's not a profitable company, I don't want to own it when things are not euphoric. And that speaks to, you know, anything, whether it's a crypto, whether it's, you know, a pot stock, whether it's a tech stock, it doesn't matter what it is. If it's not making me money, I don't want to be betting on it right now if they're not an actual profitable company. So you want to pick the winners and bet on them if you're going to bet somewhere, not try to bottom pick like the losers at the bottom of the pond, because there's probably a reason nobody's buying them. And then obviously the energy trade has played out, really the commodity trade, energy trade has played out phenomenally. And I think we're still in the early run, innings of those trades. Even if we go into an economic tightening or a slowdown, I think going into the future, the next 10, 15 years, the commodity play is going to be great. The energy play is probably going to be great. But the fact of the matter is, we might be topping out at least short term after a pretty massive run in a lot of these names. So we'll see what happens. We don't want to get too bearish too soon. But, here on the XLE, we have basically broken down now below the 21. And this is the most bearish we've seen, 2 candles in a row in price action basically going back this entire run. So it's had a nice run. Looking like there's a potential top in the making. No surprise, though. We obviously saw, we talked about this for weeks before this ever even happened, about the 1, 2, 3 drives of bearish divergence and, essentially the resistance at the slope line now that it's flipped negative. So we've been talking about that. Now here we have, triple bearish divergence playing out. We've got the hard sell signal. So it looks like it's coming back down. I think our target's going to be probably the 200 exponential and simple. So, we overshot our target on the upside. I think realistically somewhere around this level, around like 64 is what we're looking for. So let's go on to XTN transportation. So transportation did get that extra little pushback up to try to retest the 200 exponential and simple. It did get rejected again. At this point in time, I think the channel is probably not the best way to look at this. I think we're better off looking at something like this. So we have like a descending broadening wedge. I do think it still breaks down bearishly. I just think this is a better way to evaluate it. So it could potentially have a little more of a pushback up. But this is clear resistance at the 200 exponential and simple. And we closed all the way below the 8 and the 21, basically at the top of the channel again. So it looks like we're headed to new lows. I do fully expect this in the high 60s very soon. XLF, obviously financial just fell out of bed. No surprise here. We've been basically dispelling the myth of how financial institutions or financial sector is going to do well. I think we've pretty clearly done that a million times. So we don't need to really dive deep into it right now. Again, we're seeing rejection at the 200 exponential and simple. I mean, clearly just rolling over. We've got some pretty key support down below us at about 35. Obviously, that's the target, but we do expect this channel to still act as support and resistance as long as we're in it. So it's been acting as support and resistance pretty clearly. So until we actually break from it, we don't want to get too bearish right now as we are at the bottom of the channel. But we're seeing that on a lot of our charts, and it looks likely that with the velocity and the intensity, and some of the volume coming in on some of these moves, that this is likely to be a move that would break support. Because the little weak moves don't really matter when you're at support or at resistance. But when you get big, aggressive, momentum leading into it, that's when stuff usually breaks. So XLV, healthcare. So we're seeing, obviously, healthcare retesting the 200 right now. That was a pretty aggressive sell-off, not to be unexpected. We were looking at the longer time frames, and we did identify, obviously, 3 very clear peaks of bearish divergence on the weekly. So we're seeing that weekly bearish divergence playing out. We're retesting the 200 exponential and simple on the daily. So, I mean, the real question is, this area is going to act as some kind of temporary support. But the real question is, does this key level hold, like 125? I don't know that we actually get there or not, but that's really going to be the level to watch. I mean, throughout basically, what was resistance here then acted as support pretty clearly quite a few times. So I think it's likely that's where we're coming down to for that retest. And then you want to see that hold. If it doesn't hold, this starts looking real nasty. And again, there's, at this point in time, enough things have come down and tagged the 236. We should be putting this fib on every chart. Literally every chart that's been basically just going up for the last, 2 years should now have a fib from the Rona low to our most recent or whenever it topped out high. because we need to be watching those levels. Obviously, we have the 236 just below at 122, just below the previous low. So if we revisit those lows, that's the area we're watching. And then after that, we see some pretty clear confluence at like the 382 around 111. These moves have been pretty aggressive. So it's possible we see some kind of attempt to flip this around. But I think people are going to be, itchy trigger finger to just sell right away because they don't want to get another big candle like that. So I think any initial bounce we try to have early into the session, or into futures, is quickly going to get just absorbed with more selling on all these charts. So XLP, consumer staples, just making new highs, kind of putting in a little warning sign with that little rejection candle. Nothing too crazy right now. I do expect this to stay strong, but again, we are looking for a temporary top, whether this is it or sometime in the near future. We didn't quite get up to the target, but 82, and we made it to like 81.50. So, that's close enough to be happy with. I'm not going to, nitpick over a couple bucks here, especially on like a little micro fib like that. So, we'll see what happens. I'm not quite sure to call this the actual top of the cycle yet, though. It's still a little early, but we'll pay attention and see. We are showing some clear short-term topping. XLU is obviously rolling over. We obviously have a pretty strong uptrend, and we've broken that uptrend. And if you don't know what I'm talking about, just, this kind of like support off of this just parabolic uptrend. And now we consolidated and we broke down from it. So it looks like at this point in time, we're losing the heart line of the macro channel. We're probably coming back down to retest somewhere around like 71 to 70. All red histograms. This has been getting tired. We've been expecting this. So here it is. Probably still stays strong over time, but maybe it loses 1% and the rest of the market goes down too. So XLRE, so kind of just hanging out in the middle of nowhere, no man's land. We said if it went higher than this, we expected a retest of the high and then a double top. At this point in time, now it's acting like that was just it. It doesn't even have enough steam to get up there. So we'll see what happens. The risk reward on this trade setup obviously is still, to the downside. Over 2 to 1 now that it had that move up. Even an entry now. So again, that would just be a retest of what would amount to a potential topping pattern in real estate. There's a strong fundamental case for that, obviously, as well as, interest rates are going through the roof and everything. Speaking of going through the roof, Bitcoin's doing the exact opposite of that. You guys seeing a little action over here? Potential breakdown from support. What's going on, Angel? Appreciate you, brother. Good to see you. Bitcoin chart, bear flag from all-time high. What's your opinion, man? Appreciate if you can discuss it. Yeah, for sure, man. Daily chart, Bitcoin. Gentlemen, let's dump it, says the old triple dump. Yeah, it's looking like it's, like I said, we expect that continuation on a Monday. And we saw nothing happen over the weekend, so. But XLRE looks like it wants to come back down here. We're going to have some support at the 200 exponential and simple, so. Let me wet my whistle real quick. All right, so next we have VWO, emerging markets. Again, looks like we're coming down here to visit the lows. I expect new lows. The 0.5 fib is at 41. Looks like that's where we're going. With pretty much certainty at this point in time. DAX, same thing. Just another lower high. Looks like it is coming back down. We do have this low right here to act as some support, but looks like it's headed back down at least to like 13,000 or so. We will see, but DAX is not looking great. Obviously, very strong bear market. CN50, China, very strong bear market. Already revisiting the lows. Again, looks very, very bad. There's a ton of support around this level. Going back over the last few years. Man, this is pretty much as low as it should be going. So, if it breaks down from there, we're talking about back to, everybody's upside down on this. That's wild. You're talking about, that there's not a lot of support built for like 30%. All right, and then UK, we're seeing like basically that double or triple top playing out. We are coming back down to that ascending support in yellow, so we want to watch that as key support. Also, 200 exponential and simple is the real thing we're paying attention to. So 7,300. Seems like that's where we'll head down to. And then obviously we have the macro fib around 71. So we'll pay attention to that as well. And then EWZ, Brazil. So we're back down at that target area. This is where we're looking for basically. So we got the move back, we got the pullback, and now we're at the 200 exponential and simple. We're at key Fibonacci levels. The real question is, do we want to take advantage of this buying opportunity, or do we expect it down closer to like 28? So looks a little bit aggressive, but realistically, we could definitely see continuation in this move. We have the 821 cross into the downside here. We've entered into the bearish control zone. We flipped the slope over red, and we're at the 0 line now. So we're at key support right here. I do expect some kind of reaction, but the real question is, do we catch a knife right now and take the buy, or do we wait and see it carve out a bottom and get a slightly worse entry, but with more confidence? So, this is the real only thing we have to go by, and technically we have like kind of broken down from that. So, I mean, this looks like a pretty decent buying opportunity, honestly. This probably does hold, but there is definitely, the other level I'm really looking at is just coming down here and putting in another just higher low and just holding this support. And it is a ways down, so that's the real entry I'm looking for. But I think starting to just dip your toes along this range is probably what I'll be doing. Take a small entry off the 200 and the fib, and then look to kind of ladder in onto the way down to support around here. Yeah, I mean, that looks ideal, so. All right, so let's do we can jump over to crypto real quick. We're seeing obviously a little bit of volatility taking place right now with the daily close obviously being important. So we basically closed on Friday, right at, obviously if you're just tuning in, make sure, obviously all of you do, that none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. That being said, the futures chart here, we closed on Friday at the lows of this recent little swing down here on Bitcoin. So the next level to watch, the only level to watch between there and here, is 37,400. And we hit a bunch of lows right here. And then after that, we're paying attention to like 35.5 or potentially like, 32K on a wick. But it looks like we're breaking down from this pattern. It already looked like we did on like the daily, weekly. So we're paying attention now to see, what happens at this level. Do we see continuation? It looks like we're going to. We're just flipping over the slope line, red here. We're inside the bearish control zone. Looks like we got an attempted push up and a rejection on the reversion of the mean play. So that's what seems most likely to me. And then just zooming out and looking at the weekly, we saw a very clear rejection on the weekly. We're revisiting the lows. It really looks like we're headed down to like 24,000 to revisit the weekly 200 exponential and simple. At that point in time, we can start talking about potential macro bottoms. And then obviously on the daily chart, once again, just hanging out at those lows. I'm going to turn this on for just 1 second. We see we've closed and now opened a couple candles below those lows. And that was essentially the point of, no return for Bitcoin. If we break down from this level, there's no, potential uptrend still in place. And at that point in time, we have to start looking at the key support levels from the previous retest. And this just looks like basically a push down, an attempt to push back up, and then we go lower. So that's what we're paying attention to. Still is the macro chart for us. Obviously, if we look at the 5-wave retracement for the potential downtrend, we're looking at the 1. That's our 2 basically topping out exactly at the top of the channel. And now here we're just continuing on the potential 3. So we still have 2/3 of the 3 down. And the 3 probably takes us back down to around 24,000. At which point in time the 4 would push back up. We get a retest of a key level. And then we put in the 5. And that's the one that really cleans people out. And that's based on the macro looking at this entire, this is a wave 3 of the 5-wave structure. And then the bull run we just went on was the wave 5 of that structure. And now here we're in the retrace, an expanded flat. So essentially we're looking at a heavy retracement. The initial retracement just of, you know, the actual bull run itself from basically 3,000 up to 70,000, we've already come down to the 236, and that was our support that we hit perfectly. So now we're putting in a lower high potentially and rolling over. So the next target we know is the 382. And the macro 382, just for this bull run, just from 3,000 to 70,000, that's 20,000, which is obviously a key level because that was the previous all-time high. So that is a very, very important, interesting area, an area of interest for the markets for a potential macro massive bounce. But that's 20,000. We're at 39,000 right now. So that's 50% down. So if we hit that level, it's going to be either a super aggressive liquidation event or a slow, steady grind or a combination of those two. And I'm not going to lie, when Bitcoin drops 50%, altcoins go down 60, 80, 90. So that is what we're paying attention to right now. We're positioned defensively in these markets because we're at arguably the most dangerous place. Because this is where everyone loses their money. Everyone loses their money at the transition from a bear market to a bull market because they've got used to longing in a bull market or used to shorting in a bear market. And then all of a sudden it switches and they keep trying to do the same thing over and over again, and they keep trying to make up for their last losses with bigger moves. And it never works. And then eventually the market wins. And you go much lower or much higher if you're shorting at the bottom. So it looks to me like we're getting ready for basically a massive event. And I'm going to tell you right now, if price ever goes below $20,000, we're going to see something in these markets we haven't seen for a long time. We're going to see capitulation. Because a lot of people bought the all-time high at $20,000 and never looked back. The market never looked back. So if we come back down to that level, there's a vested interest in anyone who bought the breakout at 20,000, the previous all-time high, to defend that position. If that fails, or we even violate it by enough to start hitting stop losses, the cascading waterfall of selling that takes place will likely be something that we've never seen before. So 20,000 is obviously we're still a ways away now, and it sounds crazy, and a lot of people don't like to hear it, but 20,000 is the number one key area of interest from here. And the thought of, we've already been down in the 20s, so it's not that unrealistic to think that something could propel us down there again. And it looks more like distribution to me that's taking place than anything. We're consolidating at the top of the range for over a year now, and we're doing it underneath the 200 exponential and simple while they're sloped to the downside. There's nothing bullish about that, in my opinion. We have long-term bearish divergence taking place on the weekly and the monthly. We talked about this bearish divergence. It played out beautifully. We talked about the bullish divergence. That played out beautifully. And now here we have to respect the fact that the market has conflicting bullish and bearish divergence. And we don't know which one's going to play out. But it sure looks like the bearish divergence is getting ready to play out again and take over. So we'll see what happens. Obviously, the trend is pointing to the downside now on the weekly, at least for the retest of the 200 exponential and simple. And again, we're talking about 27,000 and 22,000. So got to really watch these charts and really respect what they're telling us. And now if we look at the monthly here, we've come all the way back down to the bottom of the range as expected. Obviously, this has played out perfectly and we've been able to capitalize on it. But at this point in time, we're at the 21 on the monthly. We're seeing all red histograms for 6 months in a row now of red histograms, 5 months in a row, red histograms, hard sell signal, left the bullish control zone, bearish divergence. If we lose the 21 or we close at the 21 or below the 21 in the next week or whatever, this market starts looking real bad. And our last monthly close was at 34,789. So the last thing we want to see is the close below 34,750. I'm not saying I think that's going to happen. Could we lose 10% in the next week though? Yeah, definitely. And if we close below that, it's going to look really bad because now we have a new low on the monthly chart. And if we have a new low on the monthly chart, there's not a lot saving us. Every time we come back down and threaten that low, basically that low of like 34 or so, something like that, there's one candle increments going down. So if we lose that level, if we get a close below, the previous low, and we retest that, that's 33,000. And then the candle before that, the previous one closing and that one opening, that's 30,000. And then the candle before that is 19,700. And then the candle before that is 13,834. So, and that's a solid support, 13,834. The same way like 20,000 is a solid support. But we only have, a month of buying, a month of buying, a month of buying that separates us from previous all-time highs if we start to revisit those levels. It's not like there's a big grind and we carved out support for month after month and went sideways for a year and there was buying and selling and, the money flowed into the strong hands. That's not what we're seeing right here. This is bearish. This is bearish distribution taking place. So we got to be real careful on some of these cryptos, especially, not just Bitcoin. A lot of the weaker ones or newer ones. So let's take a look at ETH. So getting denied off the 200 exponential on simple and then coming back up to 200 exponential. Again, just rejected again. Looks like it's revisiting the lows here. So we got to respect some sort of channel. I just drew this randomly last time, but depending how you look at this channel, there's a couple ways you could look at it. You could look at the wicks and do something like that, and we're kind of like at the support right now. I don't necessarily like to do that, especially not in crypto because the moves tend to be exaggerated. So if we look more at the bodies, and then if you don't trust it one way or the other, you can go look at it on a different time frame. You can kind of mess around with this, move it around, see where the heart line looks like it matters. That looks like what we're looking at on Ethereum. So we see that pretty clear top at the 200 exponential and simple. We see a pretty clear bottom based on closes here. So we've got a little bit ways to go. Maybe like 2,600 for the target to the downside. And we talk about, that's why it was so important to just capitalize on this trade and take profits on that ETH trade. You don't want to just, make 20% upside and then just give it all back. And we're actually lower than the entrance point. And now you're upside down because you got greedy when you could be up 20%, in the first quarter. Not even a quarter, really. That took a week. But when it's all said and done, it looks like we're headed back down here to the lows. Looks slightly more bullish than Bitcoin. Total market cap looks exactly like the Bitcoin chart. Bitcoin dominance is starting to creep back to the upside. So, we're just at the middle of the range. You guys know my target to the upside. It's 44.14. My target to the downside is basically 39. We're essentially in the heart line. I do think this is going to go up, which technically, what we typically see is Bitcoin going down when Bitcoin dominance goes up because the alts are losing money faster. So Matic, again, revisiting the lows. It closed at the lows. Now it's technically like in the process of attempting to put in a new low. Obviously, it has a whole day to close, so we don't know where that's going to be. But, we were talking about new lows, and here they are. So Matic, new lows. Looks terrible. 200 exponential and simple rolling over. There's nothing good about these altcoin charts right now. BNB, again, looks very, very toppy, rolling back over into the bearish control zone. Or into the bear market, rather. Yeah, this looks rough. It looks like it's coming back down here to the 382, 331. And then at that point in time, we got to look out for this massive Adam and Eve topping pattern. If we lose this level, the 382, at like 334, it's going to look real likely that this is in like the low twos. And then if we come back down to the low twos, and again, this thing decides to let go, you're talking about a like double-digit BNB. I know it sounds crazy right now, but that's what bear markets look like. And if you're like, oh, we're already in the bear market, it's almost over. It's only just begun. AVAX, Avalanche, breaking down from that key support. Not what we want to see. Multiple daily closes below that yellow support. Again, it looks like we're coming down to the 786, or the 886. So again, we're talking about $64. We're talking about $58. These things are just bleeding out value. Solana, again, just looking absolutely horrendous, losing key support. So any attempt for that positive trade, obviously that trade was no good right away. You didn't even have to take it. But assuming you did, you would probably be in the process or very soon about to get stopped out on this. Looks like it's coming back down to visit the lows at like 78 bucks. And let's keep in mind, these were some of the market favorites for a couple months there, and we're down 62% right now. Solana is down 62% right now from the all-time highs. 62%. So just think about what we're talking about here. From the top there, let's say 85% was going to be the downside target on Solana. That is at $39. It's at $97 now. So even though it's already lost 62%, that extra 23% to the downside translates to about over 50% move from where we're at right now. So 23% more from the top to the bottom than where it's at right now. But it's another, what do we say? Over 50% downside on this. 56% downside. So you got to really be careful thinking like, oh, it's already gone down 60 something percent. So I'll just hold it. I'll just buy more. I'll just dollar cost average in. And then you're already down 60%, and then you go down another 50%. I mean, you can keep getting cut in half a bunch of times. And that's assuming you're not even trading. You're just hodling. So be real careful in these altcoins. Obviously not financial advice. It doesn't matter to me, honestly, if you lose all your money. As long as you learn an important lesson. But if you lose it in vain, then, it's pointless. ADA, Cardano, again, just absolute trash. This thing is just melting down. I mean, not unlike its creator on his live streams. Again, down 72%. 72%. Wow. Remember those videos when I was talking about $3? That's it. Better sell that Cardano. I mean, it bottomed here at 76%. Man, what chart is this? It has like no history. But anyway, Coinbase. Terrible. Cardano, just absolutely terrible. I mean, I remember people talking about, oh, I'm going to load up on this if it goes below $1. Oh, that's the opportunity of a lifetime to buy. Well, maybe not if it goes to 50 cents. Or 30, or 12, or 0. XRP continuing just to melt down. I almost deleted this chart just because I don't care, and I don't think anyone else does. You either love XRP and you don't care at this point in time that it's the worst crypto, by gains, or you've given up on it by now. I don't think there's anybody left that's still kind of like, XRP might do it one day. I think you're either 100% in the call at this point in time, or you have admitted defeat and moved on to literally anything. I mean, you could literally buy into an NFT Ponzi scheme project, and it probably has a better chance of making you money than XRP. That being said, it is at a key support. We've seen it interact with this blue line a ton along the way. We obviously have this, sort of flag pattern or pennant, a triangle, whatever you want to call it, however you want to look at it. We see a pretty clear interaction along this blue support, and it's basically coming into line with the yellow support. So while I don't want to come in here and pick a bottom on this thing, what we do have to pay attention to is potential for a trade setup to develop if it starts to carve out a bottom right here for something like another one of these bounces back to the top of the range. So again, we're looking at like 30% upside with somewhere in between like an 8 to 12% stop loss. So don't want to get too excited yet, but there's potential for something in there with at least 3 to 4 to 1, 3 or 4 to 1 risk reward ratio. But again, this thing obviously trash. Don't want to bet on this, but there's definitely some potential in the future. XMR, Monero. So this thing looks like it has played out pretty well overall, but now it's coming back down to retest that breakout level. Retest 200 exponential and simple. The real area to hold is like 222, which is basically the entry price. So if this holds that entry price from the trade setup, it probably does go higher. If it breaks back down below that, I would not take a loss on this trade. It's just going to look like a failed breakout, which is typically what you see in a downtrend when you get like a bullish breakout, but overall the market is pretty bearish. You typically see the breakout move underperform. So in this case, the measure move of the channel, would have taken us up much, much higher than it actually like topped out sooner. Now, if this carves out a bottom right here, find some support, it's not unrealistic to think that we could get some sort of kind of scenario like this where it comes back down, bounces around a little bit, and then actually ends up coming back up, and hitting some of these targets. Now, obviously we don't know that's going to happen. Right now it looks bearish. So, we just have to see what the market gives us. But there's definitely some potential for, an entry second chance on the breakout, continuation. Because a lot of times we'll break out, we'll retest the resistance as support, and then if it holds, we'll see the continuation. So that's like your second opportunity to buy if you didn't already buy the breakout. Now, this could easily fail. So we don't want to get too excited right now, but it's something to pay attention to looking into the future. Daily chart on Bitcoin. Angel says, can you kindly do TA on XDC coin, please? XDC? I can't remember. Do you want that just to the dollar, or do you want it to something else? They've got like a Finex chart. Let me know if you're still there, buddy. Triple Dump says, in case of recession takes place, where do you think liquidity would be poured into? Most people I talk to already sold most of their stocks and stay in cash right now. Well, I mean, it depends on the situation. Obviously, depending on the structure of your fund or your investment or whatever else it is, it depends on what you're able to do. So in some funds, they have to stay invested 100%. So you're going to see different outflows. You're going to see some outflows out of the stock market entirely. You're going to see some out of risky bets into like safe haven plays. So obviously, I look at a lot of things specifically because they're of interest. So one of the big recession plays or well-known, recession hedges, however you want to like call it, is the play I always talk about, which is real estate, consumer staples, healthcare, and, dividend stocks. So those are all key areas that people will go to, because what do you need in a recession no matter what? You need consumer staples. That's all the stuff that the consumer needs, not the discretionary stuff. So, and when I say needs, I use that term loosely because it's like Coca-Cola and McDonald's. Okay. So consumer staples, stuff that people are not going to be able to cut back on. So that's one, obviously. Real estate, because people are always going to need a place to live, somewhere to pay rent, etc. So that tends to hold up pretty well, at least for there's enough lag on the real estate market that typically it won't react as fast. Everything else will sell off. Then you can move out of that real estate play as it starts selling off into some of the other positions or sectors. So the lag kind of gives you an advantage there too, even if the real estate doesn't hold up that well. And then obviously dividend paying stocks, because if things are not particularly great and you're not making capital appreciation through, asset appreciation, the only other way to make money or conserve your buying power or generate consistent income, or the best other way to do it, I should say, is, obviously depending on the situation, either bonds or dividend paying stocks. So depending on your allocation between bonds and stocks and what your goal is there, you may want to be more heavy into bonds and less heavy into dividend stocks, or more heavy into dividend stocks and less heavy into bonds. Most people now are super light on bonds to begin with, which is probably good considering the move that's happened recently, but that may not be the case, if we do have, higher rates going into the future. If we hit something like 3%, it's going to start looking appealing because now bonds, dividends are going to be higher than bonds, coupons are going to be higher than the dividends on something like the S&P or the Dow Jones. So now all of a sudden that looks like the safer bet once again. And then who knows, maybe we see, bonds at 5%. And then if the bonds are up at 5% or 7% or 10%, we're probably going to see massive flows into dividend or into bonds. Because, you can lock that in for plenty of time. Who knows what's going to happen to inflation in the meantime? And you're locked and ready to go. And I mean, that's the opportunity of a lifetime for a lot of the people. If you've got a few $1 million in the stock market or, bond market, and all of a sudden for the first time in your life, after basically your entire investment career having rates at, 5%, 3%, 2%, and then all of a sudden we get to some crazy scenario where you're able to capture 10%. I mean, a lot of people just sit down that forever and never worry about the stock market again. And that's a real risk to the stock market, obviously, is if the bond market starts wavering or we break out of this downtrend, that it's possible it could destroy any potential for like momentum for stocks back to the upside, at least in the short term. And that's how you end up with like a Japan type scenario. So anyway, I think we pretty much talked about all that important stuff. So yeah, hopefully that got your answer there, Triple Dumps. Triple Dump says, again, with high inflation, I don't think cash is ideal either. Well, I mean, the way I look at cash is you look at it like an option on whatever it is you want to buy. So if I look out into the future, I say for sure, I know I don't want to just be holding cash 3 years from now or 5 years from now, or probably even 2 years from now. But a year ago, a large cash position was the smartest idea you could have had. Obviously, that was, I mean, I haven't been like shy about my positions on any of these things. So if you've been following me for any amount of time, you know that I've been talking about how, I've kept the largest cash position that I've had probably ever, at least in a very long time. Which going into the end of last year, we were speculating on a lot of random things and picking tops on a lot of things. But at that point in time, it felt like, the stock market trade, the crypto trade, it felt like a lot of this stuff was already done. And the real only thing that we were hardcore bullish on, was energy commodities. And then obviously those have done well throughout the year now as well. So we want to look for other opportunities, but right now, cash is king. Now, you don't want to be holding it for a long amount of time because obviously inflation depreciates your, buying power. But who knows what inflation is going to be like into the future? Who knows if inflation's at 10% and for sure you're losing 10% on your cash position, that sucks. You don't want to stay in it forever because you lost 10% buying power at the end of the year. You might still have, your $1,000 or whatever, but now it only buys $900 worth of stuff. So that's the argument against having cash. But the argument for having cash still, even in an inflationary environment, is are you regularly seeing assets that you want to buy fall by an equal or greater amount? So in the last year, sure, maybe inflation, took away 8% of our cash buying power. Oh, shucks. How many things could we buy right now that were 3 months, 6 months, 9 months, a year ago, 50% higher, 100% higher? A lot of things have been cut by 75%. So if you have $1,000, let's say 100, just for simplicity's sake, if you have $100 and then your $100 gets cut by 75%, you now have $25 left. So now in order for your $25 to get back to break even, it has to go up. You have to make 300% profit. It has to go up 400%. It has to 4x. So it has to go from 25 to 50, 50 to 75, 75 back to 100. So that 75% downside, it could be the equivalent to 300% profits or 400%, upside, basically. So as long as I see consistently assets, companies, cryptos, whatever it is, commodities, taking massive hits like 20%, 30%, 50%, 75%, as long as I still see that happening, I am perfectly comfortable in cash. I am perfectly comfortable in cash because every one of those is another opportunity, for a potential massive gain. You're not going to make 300% on something unless you're in early or you got it when it was cheap or, there was some kind of squeeze or something in any reasonable amount of time. But if something is already cut by 75%, and then all it has to do is return to all-time highs, which is like, wow, that's all it has to do is return to all-time highs. But once it's been there, the likelihood of returning eventually is decent unless something has fundamentally changed with the company or the project, which obviously you're not going to buy into something if it has fundamental changes. Like if all of a sudden the business plan is garbage and it's like, well, it may never go back to all-time highs because the business plan is garbage. It's been cut by 75% though, so maybe I should buy it. Well, no, don't buy it if you can't make a legitimate argument for why you're buying it other than it used to be expensive and now it's not. That's not a good argument. if you can make an argument and say, well, it's just beaten down right now because, you know, it's out of favor, but one day I think it'll be much, much higher. That's a great position. So that's what we're looking for with cash. We're basically looking for that option position to buy any of those assets. So when I stop seeing regularly things that I want to own getting cut by 20% or more, especially in a single day, a single trading session, when I stop seeing that, then I'll focus more on reallocating, you know, that sideline stuff. When I start seeing the market turning around, but we're seeing the transition from bull market into bear market right now. So, you know, as far as I'm concerned, we're still a ways away from getting any kind of signs that are telling us we're going back from the bear market we just entered into back into a bull market and ready to go. Because that might take 6 months, that might take 2 years, that might take 10 years. But we're going to see the signs. It's not just going to happen, you know, obviously overnight. So we'll have plenty of opportunity to take advantage of that. Okay, so that being said, let's take a look at, I think that was all the comments there. Calma Betty, what's going on? Appreciate your analysis. Thank you. Any thoughts on the DXY? Yeah, we'll do DXY actually in a second. About to just finish up with this crypto request. So XDC, you know, obviously none of this is financial advice. I also have no idea what this is. This is just a request. So not saying by any means this is a good thing to buy, own, invest in, trade. If we just go from that low from June 2019, we know what that was. If we go from that like capitulation wick low right there to where we're at right now, we're probably going to get a slightly different picture than if we skip that. And again, I don't like to skip data points, but see, look, I like that so much better. If we go to this low right here and just skip this crazy wick, and I don't know if that's on every exchange or just on Bitfinex, but if we just skip that wick right there and go to just this pretty solid low on the daily, we see clear interaction at the 786. We see clear interaction at the 618, resistance and support. Resistance at the 0.5, nothing really at the 382, and then obviously the 236 we tested even on the way up before reaching the goal, and then once again we had tested it recently. Clearly in a bear market now, losing momentum and rolling over to the downside. Tried to gain some momentum, is currently trying to consolidate here. If it does get an aggressive move back up, I think it could go back to like 7 cents. It's at like it's at 5.7 cents now. So it could go back to 7.2, retest the 200 exponential and simple. But the truth is, if everything else keeps rolling over, this probably does too. If we touch the 236 at like 4.5 cents again, if we touch that again, we probably go into the 382. So this is the area I would be watching for, you know, the next key support. And that's at like 19, 20 cents. So you're talking about another 66% haircut on this. Again, I don't know anything about this. I have no idea what it is. Could we get like some kind of 5-wave structure out of this? Yeah, I mean, probably could. Probably could. Just kind of glancing at it, there might be a better way to draw this, but you probably have something like this going on. I mean, it could go either way. It's still a little sloppy like the Bitcoin chart, but it could be something like this. Could be something like that, and that's just a truncated fifth wave. You could also, and that would be completely valid, you could argue something like this. I don't know. I think that's probably too sloppy. This is what it looks like to me. You know, it looks like it basically had a 1, a 2, a 3, a 4. The 4 doesn't come down below the 1, and then it's just at an extended fifth wave. You know, and it's very similar to Bitcoin, where it technically could have topped right here and then pushed up and put in a slightly higher high. So it could even be, you know, like an A, B, C expanded flat where it goes slightly higher on the B retracement. You know, and if you've obviously probably all seen many a times my Bitcoin chart by now, but essentially it's something like this where you have the A retracement, the B actually comes up slightly higher than the fifth wave, and then the C comes like a little longer and drawn out. I mean, it looks a little less viable on the this chart than it does on the Bitcoin chart, but it's worth paying attention to potential for something like that. But essentially, it looks like it has completed 5 waves. So the reason I look at that, and that's key, is, if we look at the first time it did it, it came down to the 786 perfectly. So that obviously looks like a valid 5-wave swing target. So then if we go from the 2 to the 3, and we do the same thing, it comes down almost perfectly to the 382. So again, we see a pretty key fib level. So then that tells us from this level to the top right here, we have now a macro fib from all the way at the bottom, and then we have just a fib for the 5th wave. So on the initial fib, the internal fib for the 5th wave, we bounced the 236, and then we came down and tagged the 382. And then on the macro fib, we hit the 236 perfectly, because the 236 macro and the 382, of the 5th wave line up perfectly. So that gives us confluence between these two fib levels and shows us that we're not the only one looking at both of these key levels. So now if it comes back down, we would expect that to act as key support. But now here the 382 and the 618 actually line up pretty close together, like almost perfect, at like 17 cents. So that's probably the real target we're looking out for. What we pay attention to is a temporary support around the 0.5, which is right around 2.7 cents. So 2.7 cents and 1.8. I might have said 18, but I meant 1.8 cents. Give or take a decimal point. 18 cents. But yeah, that's what I would be looking for. Does not look good though. Does not look good at all. I would not want to be in this. Matter of fact, if it does come back up here, the 236 and the 200 exponential and simple back to like 7.5 cents, I would 100% be looking at as an exit opportunity to just get the hell out of this before it goes much, much lower. Or it wins crypto and changes the world, and you're just a gazillionaire. Could go either way. So that being said, let's continue on down the line. I'm going to look at DXY next. So obviously DXY closed again at a new cycle high. So as long as it's making cycle highs, we're not picking the top on this thing. It's picked back up momentum to the upside, still inside the bullish control zone. No reason to think this thing just has to top out all of a sudden. It is very, very strong. I had said multiple times when we were in this range that it would be more healthy for the world if the DXY kind of cools down. Because if this thing keeps running, it's going to put a lot of stress on the system. And that's exactly what we're seeing. So this is going to turn into a short squeeze real quick. I mean, you could argue it already has. But, I know people were in denial. At this point in time, I mean, it's hard to deny what this thing is doing. I mean, you're almost crazy if you say right now, remember, everybody was saying DXY sub 70, 60. It's going to literally crater. That was 1 year ago. Now we're at 101. There's a couple of, I'm on the weekly chart now. There's, a handful of weeks right here in 2017 when we were above this point. And then there's, a total of 2 weeks where we spent any time above this point in 2020. So at this point in time, we're about to, we're very close to putting in, what is that? 103.76, and we're at 101.14. So we're literally a couple percentage points away from cycle highs on this thing. Obviously, I'm very, very bullish on DXY. I mean, you have to be, blind or an absolute moron not to be. Macro, this is a very bearish chart for sure. But I don't care what it did for this 10-year stretch or this 10-year stretch if we're in the middle of, the upstretch. And if we look at the monthly on this, this is where everything really changes for me. When we ran up into like the 1980s, we were above the 200 exponential and simple, and we saw this thing go absolutely parabolic. From when it crossed above the 200 exponential and the 200 simple to when it peaked out, the DXY ran up from 105 all the way up to 164, a 55% squeeze. So I'm not saying that has to happen now, but I mean, from when we crossed above the 200 exponential and 200 simple and they flip blue, I mean, we're talking about, somewhere around this range. So, I mean, just to retest that previous high from 2001, that's a 33% move. And then if we start getting into the 50 and 60% moves, I mean, think about what that does to anybody that has dollar denominated debt, but is getting paid in their native currency, not in dollars. Crushed. Crushed. Think about what that does for the strength. If the dollar is strong like that, what it does for imports to the United States. I mean, if the dollar is that strong, we have massive amount of buying power for other people's goods. So it might not be good for internal services and stuff that takes place, or goods sales, etc., that take place internally, if the dollar is like super strong. But relative to other currencies, which is what the DXY is, the stronger this gets, the better it is for the United States. So the whole argument that the United States was going to kill the dollar, they were going to crash their own currency, think about how moronic that sounds now. They're going to print it into oblivion. It's going to be garbage. It's going to lose world reserve currency status. The dollar is about to be the strongest it has been, since, assuming we take out this high right here, we're going back to like 2002. We're basically at the strongest level it's been in 20 years. And it looks likely to head higher. We're on top of the 200 exponential and simple. They're both angled to the upside. We're in the bullish control zone. All green histograms, blue slope. There's literally nothing that could be more bullish on the monthly DXY chart right now. So what does that say for, Canada, for UK, for Europe, for, the other basket of currencies, or use this as a proxy, count Japan, count China, count Russia, whatever you want to do, whether you use it as a proxy or use it literally, it tells you that the dollar is going to be much, much stronger going into the future if this trend continues. Now, again, it doesn't mean your buying power of the dollar is going to be better domestically. But if you live in the United States and the dollar strengthens while there's inflation, part of the inflation will be counteracted if you import goods from other countries. Because if the dollar is 10% stronger, but inflation is up 10%, you basically are like break even almost if you're importing goods. So in a country like the United States where we import everything, a strong dollar is amazing for us. It's horrible for the rest of the world. We get all your stuff for nothing, for less dollars. How does that make you feel? You work hard, you get minerals, you build and create things, and then you give them to the dollar, or the United States, for their dollars, which are extremely valuable, even though everybody knows what's happening. Well, that's what happens with a strong dollar. So this is not good for, obviously anybody that was bearish on the dollar, anybody that took out dollar denominated debt because they were trying to arb, the falling dollar. Well, it doesn't look good. Doesn't look good. And even in the peak here back in 2000 or so, we never actually flipped the 200 simple blue. Only the 200 exponential flipped blue. And now here we have them both blue. And we're above them, trending to the upside. So when we take out this 103 level, this thing is literally just going to melt up. So I'm very bullish on the DXY. And at this point in time, still just dollars in general. Everything's on sale every day with dollars. Tesla, so it had a pretty aggressive sell-off into close there. It looked like most of that was already priced in. Still just trading the range. I think it's headed down to 900. Watching 900 on Tesla. ARKK, new lows. Big surprise. Closed at the lows. Total garbage, total trash. SMH, new lows. So semiconductors, everybody was talking about how strong they are and how bullish. We put up a very, very strong case for how semiconductors can't go any higher because they can't sell any more stuff because the orders are already out a year, 2 years, 3 years into the future. So every bit of bullishness that could be priced in the semiconductor space is priced in. Now it's just got to catch up, in my opinion. As it flips, both the 200 exponential and simple red, and we break down to a new low. So 382 is the target, $200. VanEck Semiconductor ETF. NVIDIA, new lows. Next target, 175. Again, no surprises here. Been expecting this, calling this, predicting this, whatever you want to call it. So Netflix tried to have a little bit of a move and then just continuing to sell. This looks terrible. It looks like it wants to go much lower. I would expect it to find some kind of support here, but this could easily go to 122 if this selling continues. I would imagine it would push back up to like 250 and find some kind of support. It's only $35 upsize though for, what amounts to $100 downside. So probably not a great setup either way right now. Apple on its way to the 200 exponential and simple. 158 is the target still. Going into earnings. We'll see what happens. Facebook looks terrible. New low. Headed down here to our target, 157. All these things are melting down. Google melted down almost to our target. Look at that. We got the break and almost immediately, one candle later, almost, basically at the top of the target. So I would expect it to find some kind of support here. Again, confirming into a bear market. Target is the 382, really on the macro. So again, if this does a 20-to-1 stock split, I think there's a good possibility in the next year or so, you're picking up Google stock at $100. Obviously, like, the equivalent of 2,000 without the split. Amazon holding up decent compared to some of the others, but again, Apple's the only one that's looking decent. I think Microsoft too. I don't know why I didn't have that one up today. Back at that key support though. I mean, this thing looks like it's going to the fib. 25.10 for Amazon. I mean, these look so bad right now. So bad. While the dollar just melts up. All right, and then gold did what we've been talking about. So it got that hard rejection at the key fib level, and now it's come back down. It's retesting, our key levels here. So we'll see how much lower it goes. But, we were watching, obviously, this to hold on the initial push down, and now we're looking for this to hold, and that's not holding. So what's it look like? Well, I mean, it looks like we're headed back down to the bottom of the range, 1919. So for me, this is just a low, and then a lower high, and then we're headed down for a new lower low. So I really think, we need to look at this level, 1866. If 1915 or whatever breaks, 1866 or 1850, somewhere around there. And then if those don't hold, it really looks like this was that macro failed pattern. So you got to be real careful on gold. This looks like a big old trap to me. Has been. I mean, I've been telling you guys the whole time. Silver, back down below 200 exponential. Not what we want to see. Lost the low here. Breaking down. Looks very, very weak. If silver loses 23.80, it's probably going to 22.60. And if it goes back down to the bottom of the range again, this is going to flip back over, and this probably goes much lower. I would not be surprised to see silver, in the teens, the way this chart looks right now. And then look at the gold-silver ratio. Exactly the scenario we've been talking about just played out perfectly. So we've been watching this level the whole time, putting in higher lows, and higher highs. We retested the 200 simple. We came back down. We never took out the recent low. And then we put in this low. Never took out that low. And then we came down again. Looked like we were losing the 200 simple and exponential. And I told you guys, the longer we just hang out at these levels, the weaker the rejections are, the more likely we are to just chew through this. And because this is the silver to gold ratio, like the amount of silver it takes to buy 1 bar of gold or the amount of silver you get for 1 bar of gold, 80 silver equals 1 gold right now. And our target is the 0.5, which is obviously closer to like 90 up here. So if we break through this level at the 200 exponential, which we have, and close above it, next target's at 200 simple. We already tagged that once at 82. And then if we break through 82, we're basically looking at 90. And that's probably the bottom. When that happens, that's probably the bottom in gold and silver. And then after that, we start to trend back to the upside. But that's a ways away. From 80 to 90 is a big deal. That is a big deal. We're talking about a 12% difference, if you were holding silver versus gold in losing buying power. XPD back down to 200 exponential and simple. Palladium not looking good here. Looks like it's going to let go. And we're starting to see, that head and shoulders looking pattern at the moving average. If we lose oh man, the numbers are all messed up again. I should have changed this chart over and I never do. If we lose this level, probably going much lower. And then platinum, just looks atrocious. Absolutely horrible. We've been expecting this. We've been discussing this. It's just melting down. Back at the lows. If it loses 900, next support is 833. This just looks like trash. Pretty soon they're going to start making beverage containers out of platinum because it's worth less than aluminum. Terrible. ACB revisiting the lows. Looks like it's going to go lower. Tilray back at the lows. Again, just further showing why it's so important to lock in profits. Hexo, new lows already. Just melting down. Uranium stocks. Okay, so they're topping out. We hit our box. We didn't quite get to where we wanted to be, but this is pretty aggressive. We're looking for 24 as a retest area. We have some macro targets to downside. We were clearly putting in bearish divergence. You know, this was exactly as expected. So next key levels to watch is like that 23 level. Once we get down there, we'll pay attention. We want to look at this longer on like a weekly or a monthly chart and see, you know, what kind of like potential top is this thing putting in. You know, I still want to see this down. If this gets back down CCJ to like 17, that's going to be like, you know, amazing buying opportunity in my opinion. But the weekly chart's looking pretty tired here as well. And again, you know, we're seeing this divergence clearly play out now. So we clearly have a high here, a lower high here. So we're seeing weekly bearish divergence on our indicators. Not seeing the confluence on the knife, or on, I'm sorry, on the stochastics, but we are seeing it on the knife though. The knife peaked way back here. This is much lower. So yeah, I mean, at this point in time, we want to look at these key levels, 22.73, and then realistically, 17 bucks could be, you know, amazing buying opportunity. Retested 200 exponential and simple on the weekly. Definitely be looking for that. URA daily already back down at the 200 exponential and simple. Again, showing that clear divergence. Likely, oh man, I mean, it probably wants to find support here, but if it just beat the rest of the market to the, I mean, we might get our wish. I mean, this was our, you know, this was our target to get a buy back around 1767 to like 1473. So that could be, again, an amazing opportunity. Amazing opportunity. So looking like we're going to see some of these targets. Now, again, we don't want to get too bearish now, just after a couple of days of selling off. But these look, this trade was pretty crowded. The energy trade looks pretty tired, at least the uranium portion of it. We'll see what happens with nat gas. Again, looking like that 368 level on UEC. I mean, this thing completely melting back down. We were just at 662. Now it's below 5 again. I mean, the volatility in this is amazing. Gotta love it. UU. Looking like a double top. Back down here, retesting key levels. About 7 bucks is probably the target down here. And then UROY already at support. This thing looks like it wants to go lower. It looks very weak. Very weak. Man, we don't want to see this put in a new low. So however you want to look at this, you know, we don't want to see it come below that level. And if we do, we definitely don't want to see it down here. I mean, we do. It's a buying opportunity at like 242. But if you're bullish on this, it's going to look rough. Now, when we go out to the weekly, yeah, again, I mean, that's going to start looking pretty rough if it gets back down to $2. So we'll see what happens. Again, I think a lot of this trade has really played out. A lot of these trades have played out. People taking more of a defensive stance. So I think we did it. We made it through everything. We made it to the end. Make sure you guys like and subscribe. Yeah. XX Angel, for sure, brother. Anytime. Yeah, definitely appreciate everybody tuning in today. Hopefully you guys enjoyed the stream. Obviously seeing some extreme weakness in crypto. No surprises here, as we do expect that continuing into the future. You know, no surprises here. Monday, we expect to be a bloody Monday. We'll look out for that turnaround Tuesday. Make sure that you check us out for that Wednesday stream. Obviously, every Sunday, every Wednesday, 8 p.m. till 10 p.m. or somewhere around there. And then every Friday, 11 a.m. till 1 p.m. And that's all on Eastern Standard Time. And again, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. That being said, it is April 24th, 2022. It is 9:20 p.m. Eastern Standard Time. I'm Crypto Trend Trader, and I'm out of here. Peace.